Hey, happy Thursday. Oh, the Fed. Here we go again. Fed Chair Powell spoke the other day, said one of the major contributors to our inflation is hotel costs and flights. And if that continues, we will simply build more hotels to handle the extra costs. Do you think hotels are built overnight? This has been a quite the interesting week here so far. The Fed is continuing to pretend that there is not an issue going on. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And especially this week, but weekly, we bring you these updates to really share some things that we're watching in the markets, share some things to kind of weed out all the noise and talk about what's really important. Obviously, the Fed is certainly top of the mind here this week as we start to kind of jump into it. Outside of this, hope you guys are enjoying your week so far. NHL playoffs are going still, so it's been a good time for me, although I'm bummed that the Avs got kicked out here recently. So hope you guys are enjoying that. And then we've got the U.S. Open this weekend too. So it's a good week of sports here on my end. Let's jump right into it. So starting, before I get to the Fed, I want to start a little bit talking about inflation. I don't know if you guys have heard, but inflation has been something we've been talking about for a while, and so all of a sudden now it's like the buzzword of the town. It is the biggest thing that we all hear about every single day on the news. And Tuesday was another reason for that. Tuesday we saw more higher than expected inflation numbers with the producer price index up about 6.6%, I believe it was. So I guess my question to you is, what happens when producer prices increase more than expected? And it's something to really think about, right? Because this is what's going to be that starts to work its way through the economy. What it typically means is that inflation starts to snowballs as we have fewer goods available for more demand, right? That's kind of how I think you may want to look at inflation is too much demand or too many people chasing too few of goods. And I think the auto market is a very good example to show how this has already worked. Anybody who's went to go out and buy a car or looked at the price of cars here recently may know that the market for both used and new cars is significantly up. Part of that has to do with chips, but that's a little bit on the producer side of things as well. But at the end of the day, it's too many people chasing too few goods, and so we're starting to see a lot more of that. On top of this, what was very interesting is although we're seeing all these inflation numbers, we actually saw retail sales down slightly here. Maybe this is a signal that the stimulus has kind of worked its way through the system. With stimulus, what you typically see is kind of a boost in sales, which is the whole point, obviously. But as that works its way out of the system, obviously that can slow down. So at a time where we need that to continue for this economy to keep going, we are starting to see it slow down. So something very important to pay close attention to. On Wednesday, so just yesterday, was the big news we're going to talk about here this week. So Wednesday, Fed Chair Powell came out with his press conference. And, first I'm kind of curious if you guys watch that. I'm just kind of curious if the audience is paying attention to these conferences. And if so, kind of curious what your thoughts were. You probably hear me each week talk about the little intricacies that we hear within what he's talking about, which is probably just us nerding out a little bit. But I'd love to hear if you pay attention to it, and if so, what you've got out of this last week's press conference. To summarize, basically, Fed Chair Powell said there's no change in rates, no change in tapering, really no change in anything. Basically, the dot plot, if you understand what that means, is basically the other Fed participants and when they think we should raise rates. So that's kind of signaling that maybe in 2023 it happens, but really there was no conversation about it. In fact, as always, he brushed it off, always talking about how these are temporary factors that factor into this inflation. But the interesting thing was now he said inflation is expected to be up around 3.4%, I think is what he said, which is a percent higher than what he said last time. So basically, they're raising inflation expectations, but not feeling like anything needs to be done around it. Again, mentioning this idea of transitory, in other words, temporary reasons for this. And as I mentioned at the beginning, I thought this was just hilarious. He had shared that one of the biggest contributors to these inflationary factors is flights and hotels. And again, he said, basically, he's not worried about it because if the costs of hotels continue to go up, we will just build more hotels, right? It's that simple. So I thought that was pretty good. Anyway, markets still didn't like this, even with the Fed saying they're not doing anything, which is generally what the market likes to hear. Markets were still down a bit yesterday, and depending on which sector you looked at, but down a bit today as well. And I think the challenge is that with all this discussion around tapering and interest rates and continuing to kind of punt that, they're just slowly ripping off this Band-Aid, right? And when it happens, like, we're just adding more and more pain every time we push it down. So this is really something to pay attention to, because the longer we push this off, the more of an impact it's going to make when that change is finally made, if it is finally made, I guess I should say too. So really pay attention to that. I think this is one of the biggest stories that we'll hear. It almost seems like nothing else matters. Fundamentals don't matter. It's all the Fed and also whether or not we're adding stimulus, which has obviously slowed down quite a bit since the beginning of the year. But those seem to be the big conversations. One thing I want to mention about this transitory conversation is that, it almost, the way they talk about it, it almost feels like we can just flip on and off this economy, the US, the world economy. This is a massive ship, right? To get this thing moving again doesn't just require like a quick little flip of the switch, which is probably why we're starting to see these challenges. So to say that we can just control inflation once it starts getting out of control by flipping a switch seems a little unrealistic to me. And I'm just really hoping that there's something that can be done, because I do think that this is going to be a little longer term issue than we might be hearing from the Fed president there. Next week, before I get into next week, today we also had initial jobless claims. Sorry, there's so much out of the Fed this week, it's like almost like nothing else mattered. So initial jobless claims came out at 412,000. First time we've been over 400,000 in the last few weeks. Maybe as we deal with this kind of market discrepancy between people looking and people and job openings, maybe that has something to do with it. And I'm kind of curious your thoughts. Do you think that next week we'll continue this trend? We'll be over that 400,000 mark, or do you think we're going to start heading back in the right direction here? Let us know. Comment below. We'd be happy to send you maybe a free book for your thoughts, especially if you happen to be on the right side of that. So let us know below, and we'd be happy to send that for a little thought around where we land next week on the initial jobless claims. Speaking of next week, we got home sales and GDP revision coming out. And I'll jump real quick into our question of the week, although I'm not going to spend a lot of time on this because we had so much today. But it's really around meme stocks. Last week we talked a little about crypto. This week I want to touch on the meme stocks, because AMC, GameStop, you name it, it's always through the roof. But I do want to talk about the other side of this, right? We hear all these stories about good things. We don't hear any stories about people that have gotten beat up through all this. And it's really important to understand that. I think the other thing to consider is discipline in this. I'm not saying that, people aren't making money. I'm not saying it's not okay to maybe do it with a portion, but okay, so you invest $2,000 or $10,000 even in one of these meme stocks and it doubles. Like, I understand that that's a good return, but at the end of the day, it's not going to make or break your retirement, and you are risking a significant amount in order to do it. So I guess where I'm going with this is kind of similar to the crypto, but maybe even more so. Be cautious of getting wrapped up in this kind of euphoria of this stuff, because there's no valuation to it, right? There's no fundamentals around it. It is purely this kind of hype that is picking it up, and some of these shorts getting squeezed out, which is fine. There's some sort of reason behind it happening, but just be cautious that you may be kind of gambling whatever money you put in those. And really, at the end of the day, even if it doubles, it may not get you that much further ahead in the long run. So just kind of keep those things in perspective as you're looking at it. I hope that's helpful. Please let us know if you have a question of the week. We'd be happy to help answer those. And again, let us know on the jobs numbers for next week. Initial jobless claims. You think over under 400,000? We'll send you a free copy of the book for anybody who wants to give us their thoughts. Feel free to reach out, comment below. We'd love to hear from you, and we will see you next Thursday at 3 p.m.